Ever wondered how Apple's earnings report could affect your investments? Buckle up for a wild ride. Apple's fiscal fourth quarter earnings report is here, and it's a roller coaster. This tech giant has just reported its earnings per share of $1.46 on a revenue of $89.5 billion. Impressive, isn't it? But hold on to your hats, folks, because the ride has just begun. Initially, Apple's stock took a 2% dip in pre-market trading. It's like that moment when the roller coaster starts its descent. Your heart skips a beat and your stomach does a little flip. But don't let this initial dip fool you. As with any roller coaster, there are bound to be twists and turns. Navigating the world of investments, especially in a tech titan like Apple, is no less thrilling. So we're off to a bumpy start, but remember, a roller coaster ride has its ups and downs. Now let's dive into the numbers. Apple reported earnings per share of $1.46 on revenue of $89.5 billion, beating Wall Street estimates. Quite a feat, wouldn't you say? But hang on to your hats because there's more to the story. This marks the fourth consecutive quarter where Apple's revenue has fallen from the previous year. Yes, you heard that right. Despite beating estimates, the tech giant has been seeing a shrinking revenue stream. You might be wondering, why is that? Well, it's not as ominous as it might sound. Apple's been facing a few headwinds. The global chip shortage, for instance, has been a thorn in the side of many tech companies, and Apple is no exception. This has led to supply chain disruptions affecting the production and delivery of their products. On top of that, there's the little matter of the pandemic. As we're all painfully aware, COVID-19 has had a massive impact on the global economy. Apple is not immune to these effects, with store closures and shifting consumer behavior playing a significant role in their performance. Now let's talk about their outlook. Apple's projecting a cautious view for the current quarter. They're expecting the challenges they've been facing to continue, at least in the short term. This includes the ongoing chip shortage as well as potential impacts from the spread of the Delta variant. So, what's the big picture here? Well, Apple's clearly shown it's capable of beating estimates. Their performance, however, is not just about the numbers, it's about the context in which these numbers are achieved. And right now, that context is a challenging one. But let's not forget, Apple is a titan in the tech industry. They've weathered storms before, and there's no reason to believe they won't weather this one. It might be a bumpy ride, but it's far from the end of the road. While Apple beat estimates, the cautious outlook has left investors on edge. But remember, in the world of investing, being on edge is just part of the thrill. But it wasn't all doom and gloom. iPhone sales hit a record high and services revenue soared. Indeed, Apple's fiscal fourth quarter saw iPhone sales reaching new heights. To be precise, the iPhone sales raked in a whopping $43.8 billion, surpassing expectations and setting a new record. This was a breath of fresh air for investors, as the iPhone continues to be a significant revenue driver for Apple. In addition to iPhone sales, the company's services revenue was another bright spot. Crossing the $22 billion mark for the first time, Apple's services sector demonstrated robust growth. This encompasses various services like Apple Music, iCloud, and the App Store, all of which have been performing exceptionally well. But let's not forget, every silver lining has a cloud. While the iPhone and services segments were flying high, other categories were not as fortunate. The Mac, iPad, and wearables categories faced challenges, experiencing declines from the previous year. The Mac category in particular saw a dip in performance. Comparing sales figures with the previous year's exceptional performance, the decline was noticeable. However, it's worth mentioning that last year saw an unprecedented surge in demand for Macs due to the shift to remote work and learning, making it a tough act to follow. Similarly, the iPad and wearables categories also faced headwinds. Despite the initial surge in iPad sales during the early stages of the pandemic, this momentum seems to have slowed down. As for wearables, it's a similar story, with this category also experiencing a decline from the previous year's figures. So, while iPhone and services are soaring, other categories are facing headwinds. It seems like a mixed bag of performances for Apple in the fiscal fourth quarter. But as they say, the show must go on. And with Apple, the show always promises thrilling twists and turns. Stay tuned to find out if the road ahead is bumpy or smooth. So, what does the future hold for Apple? This question has been on everyone's lips since the fiscal fourth quarter earnings were reported. To help us navigate this query, we turn to an interview with Apple's Chief Financial Officer, Luca Maestri. Maestri, in his conversation with Yahoo Finance, acknowledged the market conditions affecting Mac sales. There's no denying it's been a challenging year for the Mac, iPad, and wearables categories, with declines from the previous year, but Maestri highlighted the difficulty of comparing with the previous year's extraordinary performance. It's like trying to follow up a blockbuster movie with a sequel that's just as good. A tall order indeed. Despite the hurdles, Apple continues to draw in new Mac users. Approximately half of all Mac buyers are newcomers to the brand, a testament to Apple's enduring appeal. As they say, there's something about that bitten Apple logo that's hard to resist. Shifting gears to the iPhone segment, Apple is forecasting revenue growth in the current quarter. This prediction is like a ray of sunshine breaking through the clouds of uncertainty. The iPhone, Apple's flagship product, has always been a key revenue driver, so a forecasted increase in iPhone revenue is a promising sign. It's like Apple's very own crystal ball, sparking hopes for a brighter future amidst the uncertainties. However, as with any forecast, it's not set in stone. It's an educated guess, a prediction based on current trends and market conditions. And the market, much like the weather, can change in the blink of an eye. So do we have a bumpy road or a smooth ride ahead? Well, that's the million-dollar question, isn't it? If we've learned anything from Apple's history, it's that there will always be peaks and valleys, twists and turns. But in the face of these challenges, Apple has consistently shown resilience and innovation. With revenue growth expected in the iPhone segment, there's hope for a brighter future amidst the uncertainties. So, whether it's a roller coaster ride or a leisurely drive with Apple at the wheel, there's always something exciting around the corner. Interestingly, these financial developments unfolded just days after Apple's Scary Fast event. This spine-tingling virtual gathering was the stage for the grand unveiling of the latest MacBook Pro lineup and the updated iMac. Now, if you've been keeping up with Apple, you'll know that they're no strangers to innovation. This time they've outdone themselves, promising us a future that's not just fast, but scary fast. Their latest MacBook Pro is a testament to this relentless pursuit of cutting-edge technology. With unmatched processing power and an immersive visual experience, it's clear that Apple is pushing the boundaries of what's possible in a laptop. And let's not forget the updated iMac, a sleek, powerful machine that's ready to take on the future. So, while the financial roller coaster continues, Apple's unwavering commitment to innovation keeps us glued to our seats. With these exciting innovations on the horizon, Apple's future looks promising. So, tech enthusiasts, what's the takeaway from this roller coaster ride? Well, let's start with the obvious. Apple's fiscal fourth quarter was a mixed bag, or shall we say a mixed fruit basket. From record-breaking iPhone sales and soaring services revenue to challenges in the Mac, iPad, and wearables categories, Apple's performance was a testament to the unpredictability of the tech world. But what does this mean for investors? Well, remember that investing in tech giants like Apple is much like riding a roller coaster. It's thrilling, occasionally stomach-churning, but always an adventure. Despite the ups and downs, the tech giant continues to innovate and attract new users, hinting at a promising future. Apple's Scary Fast event was a clear demonstration of the company's relentless pursuit of cutting-edge technology. The unveiling of the latest MacBook Pro lineup and updated iMac showed that Apple isn't slowing down, but rather speeding up. Exciting innovations are on the horizon, and we can't wait to see what Apple has in store for us next. However, it's essential to approach this roller coaster ride with a dash of caution and a pinch of humor. Remember, investing isn't about short-term gains, it's about long-term growth. So even if Apple's stock takes a dip, keep in mind the bigger picture and have a little faith in the tech titan. And if you're feeling a little queasy from the ride, here's a lighthearted fact to cheer you up. Did you know that the iPhone's Retina display is so detailed, it exceeds the human eye's capacity to distinguish individual pixels? That's right, your iPhone screen is literally too advanced for your eyes. So, dear investors, buckle up, keep an eye on the horizon, and enjoy the ride, because with Apple, the journey is always electrifying. Remember, the roller coaster may be wild, but so is the potential for growth. Happy investing, and may your portfolios be as resilient as an iPhone screen. And don't forget to subscribe to our channel for more exciting market updates.